It's been a huge week for earnings. We've had Lloyds. Let's just get you through the top lines first. 2023 profits jumping 57% and gains in the shares possibly being held back by a £450 million charge against a motor finance probe. Let's just have a look at how the shares are doing right this second. Lloyds are currently up 3%, but I can show you the action if I give you a 15-minute chart to show you just how volatile it's been, because initially it fell, but then now reversing course and heading higher. Much of this around that charge due to the motor finance probe. Many analysts that are out there asking whether this £450 million was enough or more is needed. Now, let's check on Barclays as well, because Barclays, another up arrow story. It was out earlier in the week, showing you a daily chart there, if I may. And you can see here that Barclays rose after unveiling an operations overhaul and, of course, buyback plans as well. But what was the most interesting thing about Barclays was its plans to revamp, its biggest since 2016, to try and win back investors by seeking a clearer route, simpler route to less volatile returns. The lender is trying to allocate the share of its firepower to investment banking, and it's also trying to make its operations a bit more streamlined by having just 3 different parts. To HSBC, because HSBC was another big story this week, and its shares, if you can see in the previous session, down almost 8% there after it revealed a shock $3 billion charge on its stake in a Chinese bank. Investors focusing on that rather than its record annual profit. For those of you that trade and follow this stock, as you know, HSBC has taken pride in really putting its firepower in China and also Asia, seeing that as its next region, or rather current region of growth. However, that charge, that shocked $3 billion charge, did come as a surprise, given that HSBC has staked its efforts in growing there.